Yo, what up, everybody? Welcome to Go Rush Weekly Watch List. So I'm just gonna get right into it because I have a lot to cover today. So the first ticker that I want to look at real quick is SPX. I have a downside bias for XPX. I think that we have a little bit more downside to go overall. The reason why, let me just pull out real quick and forgive all the noise in the background. So looking at SPX on a broad range, this is the, let's just go to the weekly real quick. So this is the weekly chart, and what you see is just, and I think this here is the COVID low, right? This is the COVID low right here. But ignoring this, I mean, we've been in this massive up channel since 2009, since the last major massive low, right? And so we've been kind of grinding our way up. We bumped up against the top of this line right here a couple times, and we kind of dropped from there. Again, we did it at the beginning of this year. We bumped up against that line, that upper limit, and we kind of fell from there, right? So I think that we have a little bit of space to retest this bottom over here. So let me just go to the daily. I think that there's a little bit of space. Oh, this is the 2 day. Let's go to the 1 day. So I think there's a little bit of space to come back down to at least retest this low right here, as well as this low right here, right? This low here is at 37.44-ish, and this one's at 36.44. Now, the reason why I'm looking at a retest of those is because, as we know, SPX is very heavy in tech. Energy sector has been getting killed, and energy's really been holding up all year, except for when it peaked out a couple of weeks back. So, you know, there's no real sector that's holding up the SPX right now, right? And there's obviously recession in the air, a high inflation, and a couple of days ago the 2-year yields were higher than the 10-year yields, right? And that's what's known as a yield curve inversion. And when that happens, typically there's a recession that occurs right after. I think the bond yields are spiking now, so that may change, but I think that they're spiking now, which is really bad for tech. And whatever's bad for tech is typically going to be bad for the SPX, right? We also have OPEX this weekend, or this coming week on Friday. Although July is typically the strongest OPEX of all of them, and when I say strongest, I mean the most bullish. But that's in a bull market. We're currently in a bear market now, so we got to see, what the market gives us. Now, I had predicted a potential head and shoulders here, which invalidated at the break of this high here. We put in a big massive green day on Thursday the 8th, right? Or Thursday the 7th. And then we kind of put in an indecision doji at a previous resistance level on Friday. So I'll be watching it, along with unless there's like really good news or all of the stuff is baked in. I would expect this to come down to at least retest 38.37. If it can take down 38.37, it'll come back into this kind of box right here, right? This box, I can just actually pull this over. It'll come into this box over here at the break of 38.37. So I'm not gonna get too far with the predictions. I mean, we're not here to predict the market. The last major prediction I had was a head and shoulders, and that was once we were at this point, right? So I mean, so here we are. I see more downside. We might have another couple of days of bull run, but we do have OPEX on Friday, so I would just keep that in mind. So let me get right into the list. The first one I have is TGT. With TGT, we already in this play. We're in a 150 call for this coming Friday expiration. It gave you 100% on this day, right? We must have gotten. What's up, Aisha? I'm recording now, so I'm just gonna get right into it. But if you have any questions, let me know. You could tap in on trade floor or just jump on voice. I went through the SPX, but I'll go through it again after the recording is done. So the first tick on the list is Target. We're already in a Target play. We're in the 150 call for this week. The setup was a falling wedge with a big ass gap right here. A lot of room to the 50-day. So is this the 50-day? Let me just make sure. Number 2 is the 50-day. Okay, good. So we have the 50-day, and we have a TTM squeeze. So what's likely going to happen is potential move, looking based on this histogram here, on this TTM to the downside, is gonna squeeze, and then at that point, let's see if we can find. Yeah, I mean, it's already kind of firing to the upside. I know this is very light, but you have some light blue histogram volume sticks here, so it's already firing, but it's still very stable, right? So it's still kind of in a squeeze, and that's based on the price action of Friday. So what I'm looking for is just a continuation. Again, we're already in the play. I'm looking for it to retest. It's already at 150. I'm looking for it to retest 160. See. And then if it were to, you know, I mean, we played puts on Friday on this. The puts gave us 100%. If you held for a long time, it gave you 75% if you held for about 30 minutes. We can also expect this to potentially come back down and retest the top of this trend line. And then that would make our 150 very weak. I don't think it'll do it. You know, based on what the entire market was doing, everything pulled back really hard on Friday. So, you know, for whatever reason, the whole market pulled back. It had pretty much the same moves. Everything went up like crazy and then came back down like crazy. But looking at TGT, it had good relative strength, right? Let's look at SPY. SPY had a strong start in the morning and then pulled back and then tested the top again and then came back again, right? TGT, where is it? I think, let's see, here. TGT had a decent start, but not as strong. So I take that back. It wasn't showing relative strength. And then let's just quickly look at the volume on the day to make sure that it wasn't a high volume day for Target. Because if it was, then that kind of invalidates our, yeah, it was very low volume. It was low volume. So I'm expecting a little bit more upside for Target. So let me switch back and then we'll go to the next ticker. Aisha, let me know if you got any tickers you want to look at. Let's see. Back here. Okay. The next one I have on my list is GME. GME has a beautiful, beautiful setup on the daily. The setup that I'm seeing is just a pennant, right? We got this double bottom here on this support line. I think this is a weekly support line as well. Let me just take a quick look. Yeah, weekly support line. We got this double bottom. So we got one bottom here. Let me get the magnet. We got one bottom here and one bottom here. And now we're making higher lows, right? Here's a higher low, here's a higher low, and lower highs. So we're squeezing. Let me throw the, okay. And then so the MACD looks like it's about to flip back to the zero line at least, right? I'm not saying it's gonna go positive, but it can go at least to the zero line. The only thing is the RSI is pointing down. And that is based on Friday's price action. So a bunch of these RSIs from these setups are all gonna look pretty identical. They're all gonna have either be flat or pointing down based on the Friday's price action. But I do like this. I think that there's potential upside for this. It kind of has like an inverse head and shoulder setup right here, right, with these three lows right here. And then I'm just looking for it to come back to the trend line. This is going to be a really tough spot to break because we have, not only do we have that trend line, but we have this 200-day. I believe this is a 200-day. Let me just make sure. Number 5 is the 200-day. Yeah, so we have the 200-day SMA right at the trend line. So, and as you see, the both times that it's recently tested it, on this day and on this day, it's fallen, right? So, I mean, we can look for it to potentially retest that 200-day. And then from there, we can maybe find a put play, or we can wait, see what it does. And if it breaks up above, then we can, I think it'll make a big move, like one of these type of moves, like on this day, where it went from 151 all the way to 190, right? That's a 40-point day, 39-point day. If it can break up above the 200-day. So I'm just going to keep that on watch. And I don't think this play is going to be ready yet. I think maybe this play needs another week, but I'm going to keep watching it just in case. So that's GME. The next play that I have is NEO. We haven't played NEO in a minute. I'm holding NEO shares. I think the company is great. But anyway, I like this setup on NEO a lot. So not only do we have kind of a cup and handle vibe going on over here, but we also have this kind of, you know, really low shoulder, low head, a little bit higher shoulder over here, and then a little bit of consolidation with a little bit of a break out of the consolidation, making higher highs, right? 3 days of higher highs. Let's go into 30 minute. So now we're going to get back into kind of this area where there was a bunch of resistance. As you can see here, there was a bunch of resistance here. We traded in through it on these strong days, but It fell right back down, and then a bunch of volume pushed it right back down, and then we came down again. So I think that what I loved about NEO, and the reason why I'm looking at it, the reason why I started looking at it was because I saw this setup here, right? What I saw was a massive gap down, and then it kind of retraced about 30% of the move. Then it gapped up, and then it moved up strong. Big, strong move, right? This big, strong open that broke up above all this previous resistance. And then it came down, and it kind of found support, and then it kind of bounced back up. It didn't bounce like crazy, right? But it bounced back up. The next day, it gapped down a little bit, and then big, strong move again at the open, right? Along with SPY, just like SPY did. So, I mean, if I think the market would have supported an upside move, I think NEO would have had a very, very strong day. I think most of the market would have been strong, to be honest. But I like that it had a strong move here. It broke out and tested that high again and broke out above it a little bit, but then failed. And so I'm looking for it to do the same and kind of hold this blue line here at 2308. So I have 2308 as a call line. Actually, I'm going to make this, I'm going to keep this in sync with everything else I got. 2308 is going to be the line to enter calls. And 2213 is going to be the line to enter puts. The reason why I like this level for puts is because if we break down below this level, and let's say we take out this little wick right here, this is going to be a tough area, you know, kind of to support. But if we break down here, we can potentially come back down and test down here at $20.82. So $2 move, $2 move. So you got to time it right. You get the right contract. $2 move will pay you. That's easily 100% on a if you get $2 out the money. But then I zoomed out, and on my ultimate target for NEO, I saw this massive cup and handle on a daily, just like this. This is exactly how it looked like. And if we can get above this supply zone, this level where a bunch of sellers are kind of sitting and waiting, right? You can tell here, this is a supply zone because it went sideways for a couple days, and then massive move down, came back to retest it, and then came back down, right? So this is also kind of like a JCAT, like triple tap, right? One tap, two tap, another tap here, consolidation, breakout. First target will be the 200-day right here. These dash lines are all old lines, so I just put all my super old lines in dashes. I want to keep them though because they're always, you know, they come in handy. But my main target is going to be the 200-day here at 26.49, and then a measured move of this cup and handle. If it's really bullish and we get volume and we got a catalyst and all that, you know, it's so I take the top of the cup, I go to the bottom of the cup, that's 12.31, and then I go from, so I just use the ruler tool on TradingView, and I go from here, I go up 12.31 ish, which brings me to, it's about $35, right? $35 price target for NEO. So, and that's obviously, you know, that's maybe a year out, maybe 6 months out, something like that. But I like it. So that's NEO. With NEO, you know, break the green for this week. If we break this green line, we can come back up to test a couple of these levels here, this level here, that level there. And green line, okay. And if we break down below that red line, we have the bottom of the wick here to test, and we have that bottom of that wick. We have a tough little support level that's right here. I'm just looking across my whole, from left and right all the way. So where I'm at now, I'm seeing it over here. I'm seeing some kind of action over here. So this is going to be kind of a tough level, but nonetheless, I think it's a good level to break. And then we got this level, and then we got this level. So, and I'll post manual. I think I'm going to enter actual number levels on my analysis, so everybody can just be ready, pull the trigger whenever you want, if you like the setup. But that's NEO. The next one that I have is Apple. So now, at first, I didn't really mark the Apple chart up, but at first, what I liked about Apple was that it kind of broke down below, above this channel going down, this down channel. It broke out above it. It broke out above these resistance levels, and it broke through the 50-day and came back and tested it. And it still had a strong day. Apple pissed me off on Friday because I had calls. I had 147 calls, and we had gotten to 147, but it had gone sideways for so much. And even that when it pulled back, if you didn't average down, then it wasn't, I mean, I think that was like a 10 or 15% play. Like, it's nothing to even talk about, right? So, but anyway, this is very strong. This is a strong move compared to I'm not gonna say SPY, but compared to the rest of the market, I would say this is a very strong move. A lot of the market kind of died down when it came back to this high. It fell, but Apple just consolidated. So I think it's pretty strong. Now I got to change my thesis. I might have to change direction here because of the yields. We might come back down to test that 50-day one more time, but I'm not sure. I'll give levels on Apple. I just want to keep it on our radar. Let me get rid of this. Actually, I want to draw this fresh. Let's see. Yeah, I mean, broke the downtrend line. We got a inverse head and shoulders. Microsoft has the same look too. Microsoft has this exact same look. We have the head here, shoulder, and shoulder. Right, inverse head and shoulders at the line, above the 50. And now we got the call, which will just break out above this. Let's say, I mean, if it does it, right? I'm not sure if it's gonna. I think I'm still on red, so I'm gonna do the downside. Yeah, I'm still on red. So break down below this red line, come back to this black line here, below this black line, back to this red, and then from there back here. I don't know if that's gonna happen. Let's see. I don't know nobody knows what's gonna happen. That's the point of all this. Nobody knows what's gonna happen. We just play whatever's in front of us. So, and I want to make sure that we're all kind of spending time in front of the charts. Let's see. And then above this level, if for whatever reason July wants to be mad bullish, then above this level we get to kind of that pivot there. And right there. And I'll post these. I'll post these up so that we're not, because these charts are kind of hard to look at. Some of my charts. But that's the setup. It's an inverse head and shoulders into a trend line with the 50-day above the 50-day for once, right? For once, we haven't really been above the 50-day in a while, ever since March and April, the month of March, pretty much. And now we're in July, so we're back above the 50-day, so that's good. 50 days is usually a very strong spot, at least for Apple to trade nearby, right? Look at all these days where it kind of traded alongside the 50-day, a week and a half. So I like Apple, even if it consolidates, that's fine. But I like it for this week. I like it to the upside if we're bullish, and if we're not bullish and we pull back strong because of this OPEX and yields and all that stuff, then we have 1, 2, 3, 4, 5 days back to back of higher highs, so we can have one big red day that can bring you down all the way down through all these targets. So a pivot machine gun is called to the downside potentially. So that's Apple. Let me just mark this in red, and let me just quickly write potential PMG so I don't forget to add that to, because I know people are not going to watch this video. People are going to want to just read it very quickly at 9:25 in the morning and not check out the full analysis and not spend time on charts like they should. All right, so the next one is talking shit. The next one is Pinterest. The reason why I like Pinterest is very simple. I like that it's consolidating right alongside the 50-day. It's inside this box. It's a very clear box. Let me see. The last time it was above the 50-day, it was above it on this gap up. For whatever reason, October, right? Who knows? And then it gapped down like crazy. This was all news based. This whole move was news based. But man, this is ugly. But anyway, I like Pinterest for where it's currently at. I like that it put in a big, massive kind of reversal move here between these three candles, between this black candle, this black candle, and then this kind of reversal candle, and then a big bullish candle, big bullish engulfing candle. Excuse me. So I love that it's consolidating. Let's go into 30. And it's just kind of trading within, big move, and then trading within this range. And it kind of has the same look as NEO did, where it kind of made a big upside move, failed, came back, tried the upside move again. Market didn't support it, failed. Right, so simple. NEO's a simple play. With NEO, you want to, with pins. Pins, you want to, let me just put it here. Okay. With pins, you want to play Do I have red? I think I have red. If I have red, then yeah, okay. So we're gonna just play these levels right here to the downside for pins. If it fails, if it breaks down below that, you know, I think if it does break, it's gonna give us, let's get rid of this one. I think it'll break this. If it breaks, it'll give us big moves just based on the 2 days of consolidation. Let's see. I'll put it down here. See something real quick. Let's see. Yeah, I mean, the RSI is flat, so I can go anywhere. The MACD is pointing up. So, you know, I mean, it's not like, it's not swinging though. It's not swinging. What I mean by that is like, look at these swings. Look at this, like, look at this big, massive histogram. Big, massive histogram. Like now it's just kind of flat, right? It's kind of flat. Let me just draw this just in case I see something different here. It's also good to draw your trend lines on the MACD as well, because let's say you have a MACD that's falling, right? It's falling in strength. And then I don't see this for pins right now, and I'll tell you why in a second. But let's say you have a MACD that's falling in strength, but then you have higher lows forming, right? So this is called the divergence, right? Because the lows are going higher, but the MACD is going lower, right? They're not both going higher. If one is higher, one is going higher, one is going lower, and you got a divergence, typically the stock price will follow the MACD. The MACD is the real, you know, it's called the bearish. At this point, it's a bearish diversion because this thing is bearish. So it would be called a bearish divergence. Now, the only thing that I say that this is potentially not the case for Pinterest is because the signal line and the MACD line they act as an RSI as well, right? So look how high it was over here, these two lines, and look at where the stock price was, right? And then look at how low it's been. And so now it's just kind of cooling off. It's pointing up. It looks like it wants to work its way at least back to at least the zero line. So that's why I say this is not the case. But it could be, who knows? So let's see. Let me pull this down. And then I want to look at the TTM. TTM looks like it's getting ready for, it looks like it's ready to support an upside move based on where it's at. It looks like it's about to be at zero tomorrow or the next day. And same thing, it has like these big swings to the upside, big swings to the downside. So this MACD and this TTM are both kind of consolidated. They're not giving us a lot of these bigger swings that it's had. Just look at something real quick. I want to see, because I see kind of a wedge here. Yeah, there's kind of a wedge right here. It's not the prettiest, but do like that. Do like that. All right, so there's my wedge. You know, and then one more thing I want to mention is these things are lagging. These three indicators down here, they're my momentum indicators. They're my favorite ones, but they're lagging. They tell you kind of what happened in the past. And the price action and your levels will tell you what's going to happen in the future. So just keep that in mind. So we got break above the high. We got calls, break above high day on Friday. Losing my voice here a little bit. Yeah, we break above high day on Friday. Then we got calls. And this is a tough level. I'm just going to put it here. Right. Go back to the daily. Go back to the daily. All right. So break above this level here, which is basically the 3-day level. 3-day level here will give you. I'm going to skip this one because of this consolidation. I think that we're going to break out above this one easily. I think we can potentially test this one here and that one there. And potentially that one there. Right. Now, if this continues to stay within this wedge, then similar to the measure move that we did on NEO, you can do a measure move from from the beginning of where the wedge started. Let me take my magnet off. This is a ninja trick here. You do a measure move from the beginning of where the wedge started here, and how long basically it's been consolidating, right? I have to do it with a trend line. It won't work with that measurement tool. You do it from the beginning of the wedge here to basically how long it's been. Let's say, and let's just assume that it does it all the way to the end of this, and then it breaks out. When it does break out, up or down, it'll give you. Shit, hold on. I can't. There's no way to measure. Anyway, it's gonna give you the same exact whatever this distance is. It'll give you that same move to the upside or to the downside. It's a measure move out of a wedge. So, but anyway, I like it. I like it to the upside. I like it to the upside. We have earnings here. There's probably maybe a potential earnings run up. I mean, I don't know. Who knows? Who knows with this market? Pinterest makes money on ads. I just bought something on Etsy the other day who also makes money on ads. And I don't know. I mean, you know, I don't know. I don't know if ads. I think Facebook reported and they do ads or Google. One of them reported recently and they do ads and somebody reported that they're not doing as well as they should have been doing. So obviously, right? So maybe the downside is a better play. All right, the next one I have is DDOG. DDOG. It's like a cup and handle, double bottom. Let me draw them out. Draw them out. Here's a bottom. Here's a bottom. Two bottoms at the same level. I think that's a weekly level also. Not really. A bunch of stuff over there. Double bottom with a higher low. Here's your higher low. It can be also kind of a inverse head and shoulders. If you were a two-headed monster, right? You have shoulders, head down here, shoulders, back into this very strong resistance. You know, we also got the triple tap. Here's one tap, here's two taps, and here's three taps with a consolidation. So DDOG is actually a beautiful, really, really strong setup, really beautiful setup. Get rid of that. So let's see. So for calls, what color is this thing? Let's see. Let's see if it's green. So for calls, I would take it above 111 and 10 cents. And for puts, I would take it. And DDOG, I like DDOG because it makes really big rangy moves. Some days you get like, it's like snow. Like when you get those big moves, you get like really, really big moves. And so you can go a little bit out. What that means is you can just go out the money a little bit and get some nice returns. So above this line, you can get to 116. That's a $5 move. So that's a nice move, right? And DDOG, look at this candle. This candle did from 96 to 116. That's a $10 move, $10 day. So with a good consolidation, you can get a nice $10 move out of that. So that'll be a nice easy move if it can do it. And it's already above the 50 day. So I like it. And then, so I'll just put that first target there. It might blow through the water. And then below that, let's do downside. Yeah. Downside would be, I'm just looking at this level here. I will call it like right here somewhere. Like right there somewhere. 104.39. Let's call it 104.50 because stocks like round numbers. So let's call it 104.50. And so below 104.50, it's the same thing. I would say you got a nice potential to come back and test this top of this box here, right? This little box right here. And if we break down below that box, we can test this little area over here, this little pivot right there. And that's from 104 down to 94. So $10 up, $10 down. $5 in between as a price target, right? So you know, if you take puts here, it comes down here, you can start taking some profit, and then you can hold maybe one or two runners to see if it can go down all the way down to the bottom. And then same thing on the top. If you take it at the break of this line, 111.11, let's call it, up to 116. From there up to 120, right? So let's see. And then if we're looking at the MACD is up, but it's failing. It's slowing down. TTM is flat. RSI is flat, and TTM is beginning to build its bull side. I really like this setup. I like the double bottom with the high low a lot, and I like the triple tap a lot. So that's gonna be probably something we find, hopefully a play this week. I'm actually gonna set my alert right on this level too, so I don't forget it. Set my alert. I'll do it 111. 111. I'll do it at the break of day high, just to be safe. You know what's gonna happen, right? It's gonna gap. It's gonna alert me that it broke. It's gonna alert me when it breaks, and it's gonna be a candle, like a crazy ass $20 candle, some shit. And then we'll jump in, and then it'll pull back. So anyway, all right. Next one is GM. GM is one of my favorite setups again for the week. GM has a good catalyst. If we scroll up, if you're in the trade floor, in the server, in GoRush Trading Academy, then you'll find that there is some news, a piece of news that came out on yesterday at 11 o'clock from Fast Company that says GM reports 77,000 people are on the wait list for its new electric Hummer, more than a decade after it stopped making the notorious SUVs. The opposite side of that news is that the Hummer EV produces more CO2 than a gas-powered sedan. Now, I don't think that that bad news is enough to bring the stock down. I don't think that people care. Like, investors don't care about emissions right now. They don't, right? Investors just want to make money. And so the news of 77,000 people waiting for it to be produced is really good. Now, the only thing we have to watch out for is the potential for them to say, oh, well, you know, because I think they had already said something about on one of these days where it fell, one of these days, that there was a supply chain constraint with chips, right? They mentioned that again. So that's already in, that's already, we already know about that. And now we have 1, 2, 3, 4 days of back-to-back higher highs, even based on that news, and some red days, but still higher highs, right? So GM is another one I looked at on the 30-minute. And the reason why I like it is, although it's kind of forming a head and it looks like it's forming a potential head and shoulders right here, right? We got the head, we got the shoulder, head, and then a potential other shoulder over here. It had a big gappy move, came up, gap down, fell down with the market. Strong day here, gap down, strong day. Like, it just keeps coming back up. It just keeps working its way back up. And now that it's staying up here, it's kind of testing some of these previous resistance levels. It came down to test down here at this level where it ended the day here, and where it started the day here, and where it ended the day here, and where it fell here. It just, now it's at the other side of those levels. So I like it. I'm not gonna say it's ready. I want it to hold 32.26 and show some kind of, like, you see like this price action right here where it's falling and then it kind of slows down and it turns around. I want to see it do the same thing at 32.26, right at this level. If it can't maintain this level, then I would enter puts right at this level and bring it down to the downside. What up, Barbie? So if it can't maintain this 32.26, then I would and form some sort of reversal on like the 15 or 30 minute, the way that it did over here. If it doesn't do something like that here, I would take puts to the downside, and I would play it down to 31.32. So about $1 to the downside, and break up above this level. I put this level just because I see that there was some support here, resistance here. So that's the reason why I like this level. I want to see it reverse here, maybe start a position if it does reverse, break here, and then go full position once it breaks here and kind of holds here, right? I have this level at 33.32, which was just a level of confluence here, a bunch of price action here. So these are the key levels I'll be watching. I need that reversal here first before anything. I'm gonna go ahead and set an alert at 32.50. I'm gonna set an alert at 32.50 for it to kind of get my interest. That's a good level because it has that little wick right there. It has these wicks over here. It has this kind of price action right here. So 32.50, break above, and then from there I'll probably start looking at it. Zoom and UPS. Okay, for sure. UPS is on my list too. So let me do. I'll do Boeing, HD, and then Zoom, UPS, and then we'll go back to my list. So let's do Boeing. Actually, let's just do Zoom and UPS because you're on the call. So Zoom 1 day. So Zoom is currently above the 50-day. Now, as we know, there's a potential catalyst for COVID back in play. For those that don't know, there's this new variant that came out that's supposed to be it's supposed to not care about your vaccine and not care about your protective measures. It's supposed to be really tough, right? So let me see if I think my wife sent it to me. I'll send it to you guys. Let's see, actually, hold on. That's right. Just so that we have it. But anyway, whatever. I'll find it somewhere. She's chatty in my text messages. So we have and I got about 30 minutes, so I gotta go a little faster. So we finally broke above this 50-day, and we have COVID as a catalyst. And now we have a couple of nice things on this setup here. We have a double bottom right on the 50-day, pretty much. Like this one came close, it didn't touch it quite, but it's right on it. And then we have a triple tap forming right at this line, where this it's not a crazy level, but you have a tap, consolidation, tap, big move down, right? So now this is going to be a very key level. As you can tell, when we came back to this level, big move down on 4 days gap down, right? Now we're back at this level, and we're going to test it again and again. So this is actually a really great a great ticker to look at for us, because if we break this, and you know what, let me just add, and Zoom is another one. Zoom is another one that has like these big rangy days, especially when it was up at trading at like 500. Can't believe it traded at 500. So if it can break out above that level, this green level, then I think we have a big move to the upside. And it might not be a 1 day move, it might be like a multi-day move, maybe 2 days, maybe 3 days. And if we break down below this level, then I see us going back down to the 50-day, right? So let's see, because I'm in green already, so I'm just gonna do the upside. I have a pivot point. If you look all the way to the left on where the last earnings was, not the one in May, but the one in March or February. There's a pivot point right there, as well as, so it's right here, this pivot point, and then it comes back over here to this support here. So that's a nice level for us to kind of slow down at, about $10 to the upside. Above that, I would go to kind of where the top of this box is right here. There's a box right here, and when I say box, I mean consolidation. There's a consolidation here forming a box of price. So I would just like to test this one test the bottom of it, and this one test the top of it. Those are my two levels for the upside. If the catalyst is strong, and we can get to 134.57 within a week, and we can get to the next one by August. So real quick, anybody who's watching this, I am going to get back into, I think that we're in a place where we can get back into putting time on our plays, right? I'm not a big fan of weeklies. They're hit or miss for me, really, but typically when I put time on the plays, they tend to pay out a little bit better for me. And I know that a lot of us are working, a lot of us are, we can't just sit in front of screens all day. So I think that that putting time on our plays is going to be a little bit, it's going to be a good strategy for us to kind of, even if we take day trades and scalps and overnight swings, I think that incorporating some plays with time are going to be good. And the reason why I like it, especially now, is because, like, look at Zoom. Zoom has just been trading within this big range for about 3 months now. And that's what we want to see. We want to see that kind of stage one where it kind of trades within a big box, and then it starts to change direction. Like right now, we can't really identify a trend. Obviously, this was all in a downtrend coming down. What up, Keyshawn? All this was coming down in a downtrend, and now we've been just kind of going sideways for a bit. We've been forming higher lows, but I'm not going to call it an uptrend yet because we haven't formed any higher highs, right? But I like to see the sideways movement for a little bit, for months. Once we do break out, then potential for the upside. So now the reason why I mentioned longer swings is because I think that we can get to 147.59 or the 200-day by August, by the August Friday expiration, the August OPEX. So So I might there might be a play for August, depending on how this works out. I'm gonna keep watching it. A lot of these watch lists, you got to just keep looking at them constantly, every day. See how they shake out. Right? Look at the weekly candles. Look at the monthly candles. Come back to the daily, intraday. Like you just got to keep them on watch. And I think that when you see something interesting like that, and you see it kind of shake out in the way that you expect it to, and the catalyst is supportive of whatever it is that you think that's gonna happen, that's where the real money's at, because you're not just making like a quick 100%, 200% on a day trade. You're making like 500, 600, 1,000% on that you can just chill and hold for weeks at a time. So I think we're beginning to potentially get back to that, but I don't know. We got the upside targets and we got the downside targets. The downside targets will come much faster than the upside targets will. If you play calls, I would put a lot of time on it. I would start looking at August contracts. For this 135, I would say maybe 2-3 weeks out. For the 150s, you could probably play. You could play out pretty deep. Let's look at Zoom 150s real quick. Zoom 150s for August 19th. 150 calls. The 150 call is $1.78. There is where's the 150 call? There is 1,600 people in the chain already, chilling, waiting, right? Waiting. There was only 45 contracts traded on Friday. It either went up or down, right? It's either going to be 1631 or it's going to be whatever 1660, whatever that is, plus 45. So there's a lot of people here at this 150 in August. And this is a nice safe play because there's plenty of time for it to do whatever it needs to do. Plenty of time. And that's what I like. I like time. And this is a very cheap contract relative, right? And it went down. It had a down day, right? Look at all the sellers that came in at the end of the day on that last day candle. And this contract only dropped 20%. So I mean, it's not bad. It held up pretty nicely. So this is a decent contract. Let's look at this Friday real quick. This Friday, I wouldn't even go further out than, I'll probably go to like the 125s. Decent open interest, decent volume, and then decent price, 195 for the two. Decent price, not too bad, right? If you want it, play the 195 to the upside. Excuse me, 125 to the upside at 195 per contract. If you like the downside and you want to see it break 116, it can get down to 110. Play the 110s. They're about 97 cents, 98 cents. The 110s. So I like the 110s. If it gets downside, based on these days of selling, right? These 2 days of selling, plus every time it touches this level, it comes down hard, touches it. Maybe it comes down, maybe not. So let's just watch it. See what it does on Monday. Zoom is still tech, and so we got to be careful with tech overall, only because of the yields and all that. As the rates, the bond yields increase, people take their money out of tech and put it into bond yields and bullshit like that. So that's Zoom. Aisha, what's your bias for Zoom? Which side do you think is gonna go? Just from my knowledge. So while she gets her answer, the next one that I have is, and let me know why. Just let me know why real quick, upside or downside. And obviously no answer is wrong. So the next one is UPS. Aisha requested UPS. UPS is also on my list. I love this setup right now. I think it's very beautiful. It has an inverse head and shoulders. Inverse head and shoulders, or a kind of an ugly cup and handle. If you let me just draw it out so it can be a little bit more pronounced. We have the inverse head and shoulders. You can see it pretty clearly on the screen with that little red line going like that. We got one shoulder, head, shoulder, right? Whatever, elbow, whatever. And then we got this basically downside move coming up, making a cup, and then we got a little handle right here with consolidation. This is also kind of a triple tap. If you have, you have one major tap right here, one major tap right here, major tap right here, major tap here, consolidation. Bunch of buyers on these 3 days. Look at all these lower shadows. Buying pressure. Buyers like it at this level here. Right? So this is the 30-minute. This is a 15-minute. It's 30-minute. So on a 30-minute, we have. I like to zoom in and out of these things to know exactly kind of what the strength is and what everything else looks like. So consolidation, open high, gap down, fell down, open high, gap down, gap down. What up, Toast? And then from here we kind of worked our way up with some volume. Choppy day, but ended up overall pretty high. Back at that level, and it closed at that level. Sellers pushed it down, and then it gapped down, and I think it gapped down on news. I'm not sure, but it keeps testing this purple line here, a bunch, and now it's trading right at the line. Now it's actually trading on top of the line, so it's an interesting line. This is my line for my analysis last week. I'm just gonna leave it there. So now, if we want to play this week, am I on red or green? I'm on red. Okay, so if we want to play this week, then I would say, man, I wouldn't even take puts until I don't think the risk reward is there for puts, to be honest with you. I don't think it's there. I don't think it's there, right? Like you got to wait for it to come all the way down to this level to just get to like these two levels here. It's not that big of a move. I mean, it's like a $7 move if you can get the whole thing, but look at all these buyers. Look at how many buyers are here. All these buyers on and most importantly, if you go into smaller time frames, you know, the market was dumping this whole time, and this thing held up pretty well, and buyers liked it regardless. Like buyers loved it. Look at it, could have fell all day, and buyers said, "No, we're gonna keep it up." So the buyers like it here. Now let's look at volume real quick. Just want to look at volume real quick. Make sure that, because without volume, then it's a nothing move, and we could stop talking about it. Yeah, well, the volume is dying on it, so that's something interesting to watch. Let's see. This is what I want. This is what I want. So volume is dying, so let's just keep that on watch. We are sitting above a local point of control, local volume shelf here. You see this shelf. So for anyone that doesn't know, the volume on the x-axis is volume based on time, and the volume on the y-axis is volume based on price. So this is where buyers are and how many buyers are at a certain time. This is how many buyers are at a certain price. As you can see, this volume shelf right here has acted as a support because this is where the buyers are stepping in to kind of buy the price up, to buy the stock up, right? So we have that. So I have my downside targets. I'm not loving the downside risk reward. I think the upside risk reward is much better. I would say that a break of this level here is a little bit risky because you got a little bit of sell pressure above that right here. You also got this hangman or whatever the hell these shits are called over here. So I would just be aware of that. But you know, above those two levels, we got this level and we got this level. And if we get to this last level at 192, we got a nice gap in volume. Nice gap in volume. You know, the whole market has the same gap, by the way. This few days, the whole market has the same gap. So nice gap in volume if we can get up there. I like the risk reward to the upside better than the risk reward to the downside. Let's go back to the momentum indicators real quick. Yeah, TTM is going upside. RSI is cooling off a little bit. But I mean, RSI, look at these drastic changes. So maybe, who knows, right? And then and MACD is kind of bullish, so it's slowing down a little bit. We haven't reached our peak here yet. One thing I do want to point out while I'm here is that there is this. The histograms are trending downward, right? Histograms are trending downward, right? While price is trending upward. So we have, again, that divergence that we mentioned earlier. There's a bearish divergence. So though the risk reward isn't really set up for the downside, if we can, I mean, if price meets the MACD and says, oh, we're bearish, all right, let's turn around, then we got some of these downside targets. I think the 50-day would be the main target to reach. And then if we let go of that 50-day, then we can say, all right, boom, there's a lot of, at that point, you know, that we can start to touch this level and this level, right? And that's after we take out the 50-day, and that's if the MACD is the true indicator, which typically it is. Typically, whatever MACD does, price, whatever MACD says, price does. So whatever MACD says, price does. So let's just keep that in mind. And again, you know, just lower highs on the MACD with higher lows on the price. Usually price says, oh, MACD is the one that runs it. So, but anyway, I like it to the upside. MACD likes it to the downside. So we'll see what happens. Let's see. Let's do Jagus said, let's do Boeing. S is going to talk about Boeing because it's his baby, but he's not going to talk about it now because he's not here. So let's talk about it real quick. I have a strong resistance level here. Very strong resistance level there. And then we also got this trend line there, right? So strong resistance versus trend line. You're welcome, Aisha. Strong resistance here versus trend, and I got 15 minutes, so I'm gonna run through this as quickly as possible. Strong resistance versus trend line. We got the 50-day underneath it, a bunch of dojis, and so now what we want to do is we want to see a breakup. What up, DYT? We want to see a breakup above this level here at 140.99 or 141. We could just call it. Let's just call it 141. Strong break above that will give us, and let me change the color to green because this is our entry. Nice round number. Break above that will potentially put us back at this kind of pivot there. You can see that a bunch of sellers stepped in there above that. Boeing gets gappy too, but Boeing, I haven't really been able to time it as properly as I want to, so I'm not gonna say much about it. But Boeing, when it does give you what you expect, and it makes nice moves. It actually fell out of that channel too. It was in this crazy ass channel. See, it does this channel break a little bit, and then, you know, death, 200-day death, right? So now what I like about it a lot too is that we have a double bottom that formed, even though the other one's a little bit lower, but same shit, right? Double bottom, boom. Big gappy move out of the double bottom, consolidation. There's like 5 taps here and nice consolidation. So I like the upside risk reward to this. When I say risk reward, for those that don't know, it's this. Let's say you take your entry here. And this is a tool on TradingView. This is your support right here. And then your target is right here. Your risk reward is 3.66. So for every dollar that you're willing to risk, you can make $3.66 based on this setup, right? So that's a really good risk reward ratio. Let me go back to UPS to just analyze the risk reward to the downside that I didn't love. And we go here and we go to short position because we're going downside. My entry would be here, and then my stop is like, I'll put at the pink line just to be generous, and the 50-day is my first, and is a 0.73. So I'm risking, for every dollar I risk, I have 0.73 that I'm willing to make. You know what I'm saying? That's just, to me, that's just not a good risk reward. It's just not a good risk reward. Oh shit. So apparently you can chat in the hotline during a call. DYT just posted in there. So very cool. I haven't seen that before. All right, so that's what I mean by risk reward. I don't love it. I think that that's why I didn't really like it. I mean, if we do the whole move, it's better. Obviously, it's, you know, 2.28. So for every dollar you're willing to risk, you can make $2.28. And what I mean by that is, like, it's bigger than just dollars. It's bigger moves, right? Risk reward is really measured for if you're trading shares, but it ends up being really nice math if you're trading options as well. So yeah, this probably is where it should be. This probably is where the chat should be. So if you guys click on the hotline, there's on the top right, there's a chat. There's like a little chat box, and then from there you can you can chat in there. I'm not here, so I don't get fined. I'm here, so I don't get fined. Okay, so that's my Boeing to the upside. Let's do downside. I like to look at both sides. I would take it at the break. I wouldn't touch it above the break of the 50-day. The 50-day would be my entrance into this play. And then from there, you got some nice downside. Decent downside, not so bad. So there's your upside and your downside. That's what I see. I mean, I see a big, any which way that it breaks is going to be big because of all this consolidation. It's going to give you one of these big rangy days. You know, this had the high of 147 and a low of 132. So 15-point day. So it can give you a big rangy day to the upside or downside, depending on what it wants to do once it decides to make its mind up. But this is a very, very nice setup. I think it's beautiful. I think I'm interested to see what S is going to say about it. So Jagus, thank you for asking for this one. Let's look at HD, and then we're gonna run through my others because I don't got time. I gotta give the office up to my wife. She got important things she gotta do. So double bottom, high or low, 50 days is the target, first target, right? Break above day of high, high of day. You got the 50-day. Above the 50-day, we got this pivot right here that I'm looking at. Just look over to the left. You see how many times the price touches it. I got to get rid of all these lines, but I think for now, these will suffice. 3 targets to the upside. 50-day being the main one. And I like this because, bless you, because I have clean levels to enter. I like when I have clean levels. HD has 5 back-to-back or 6 back-to-back higher days, 7 back-to-back higher days, 1, 2, 3, 4, 5, 6, 7 days of higher highs. So if we get a short play, then we have 1, 2, 3, 4, 5, 6 potential pivot machine gun. You see what it did here? It made a high here, high here, high here, higher high here, and then it turned around and took them all out. High here, and then can possibly turn around and take them all out, depending on what investors want to do, depending on what the market wants to do. Another thing to mention is the ones that have, and I think the bias here is probably better to the downside. That 50-day is going to be tough to break, and look at all this box of all this price here that you got to break through. Now, when I see a bunch of, I call that traffic. When I see that, I look at this volume. And you see all this big block of volume traded at this price. This is going to be tough to get through. Look at this big gap right here. Big, nice gap. Big, beautiful gap to the downside. Now, remember the 50-day is lurking right here. The 50-day is here at 291. So it can possibly come up to this 291 and then smack down like Mutombo. I like the downside on this personally. Let's see. Lumber's at a low. Mortgage numbers are down. This is a long position. Oh no, this is a short position. Mortgage numbers are down. Lumber's at a low. Keep the 50-day as a stop. And let's just play it to the bottom of the setup, the bottom of the structure. We got 2.3 risk reward ratio. Lumber's at a low. Mortgage numbers going down. Inflation high. The cost of materials, trust me, the cost of materials is very expensive at the moment. And so I think that's a catalyst for a downside play for Home Depot, especially with CPI numbers coming out tomorrow, which I know that once they come out, DYT is going to put us on. And shout out DYT. DYT has really stepped up and shown us, supported us, supported this entire community. And so for that, we have asked her to step up and kind of be our news person and our voice in the streets. So shout out DYT. Thank you for everything that you do. We appreciate you. We love you. We love you very much. So you know, when those numbers come out, I'm sure she's going to be on it. It's either going to be her or me. One of us is going to be on it. And we're going to have potentially, I think, bad news in certain sectors, such as Home Depot, such as Lowe's, such as XLI, right? And that's going to support a nice downside move. So that's my analysis for Home Depot. We can ignore all these levels up here because they're all old. I got to reevaluate them. Let's just quickly blow through this list because I have a few minutes. CPI numbers are going to be horrible. I agree. One thing I will say though is I like Target to the upside. I like Walmart to the upside. Because even though the numbers are going to be terrible, these particular companies have a large inventory and they're going to drop their prices. And I mean, they had already gotten killed, right? Look at the price action on this. They had already gotten killed. So that's that. Retailers have been posting increased gain for June. Exactly. So, I mean, I think that certain sectors such as XRT are positioned to move up. So we'll see what happens. So we did GM. Let's look at Baidu. Baidu has and we haven't seen this name in a while. This name is right back into a spot where it hasn't traded in a very long time, which I love. Let's go into the momentum study. So right now, it's kind of forming a rising wedge into an area where it's very tough to kind of break out of, right? A bunch of sellers stepped in. Baidu, look at the intraday. So you can see kind of how funny it looks. It's kind of funny looking, but look at this. Nice move, nice impulse move, pullback, continuation, impulse move, pullback, continuation. Big strong move down, but then buyer stepped in and brought it up above 50% retracement. Big gappy move up, consolidation. Like, look what happened here. Price fell here, fell hard here. Let's see. Jagus. I'm not sure how to pronounce it, but I just went through your HD and your Boeing. Let's do it real quick since you're on. I want people to SHRINKFLATION. That's a nice, interesting name. Boeing. So Boeing, I see upside to it. I think the risk reward is skewed to the upside. I like the fact that it formed this double bottom. It's forming higher lows. It's consolidating strongly. I think it has a 15-point day in it. If it can get a nice bounce, a nice breakout, a day like this, it can potentially break to the downside. I got your downside targets right here. I got your upside targets right here. I left my risk reward to the upside because I like the upside much better. I have this 50-day. I wouldn't touch the downside unless we break the 50-day. I would touch the upside once we break this number at 141. I would start my position, and here are your levels to the upside. So I really like Boeing to the upside. Potentially, you can go to the downside. I don't think Amazon Prime Day is a big catalyst for Amazon. It hasn't really been. I mean, it might be possibly now, but I mean, the shares are so diluted that who knows? Who knows? But that's something interesting to watch. I think in 2019 and 2020, Prime Day was a strong catalyst. I don't think so anymore. I think that Prime Day is a good catalyst for earnings, for the next earnings that Amazon has. I'm not sure if it's a good catalyst, but we'll watch it. I mean, Amazon, I don't have it on my list now, but I'll make sure to do an analysis on it before the start of the week. Jagus, I don't know how to pronounce it. Downside play for Home Depot. Home Depot has failed the 50-day. It tried over here, consolidated, and fell. The last time it was above the 50-day was way over here back in January. Home Depot, lumber prices are decreased. Mortgage numbers are down. Cost of materials is high. Retail, people are calling, like Graham Stephan on YouTube, he's talking about the housing bubble has burst, which I think is bullshit. I think we have like another 6 months before you see some real mudslide. But anyway, I see that it can potentially, I put the upside numbers here, break out of the day high, break above the 50. We could test the top of this little wick right here, along with previous support over here, right? Over here. Support on these 2 days, support on this day, support on this day, resistance on all these rest of these days. This is the next level right here to the upside, right? So we have 288, 290, and 296 to the upside. I like it to the downside. I think it can come back to test this 50-day and smack down like Mutombo. You see what it did here? Formed higher highs, boom, boom, boom. 5 days of higher highs, and then a pivot machine gun to break all that party up. Y'all having too much fun. Kill that noise, right? Boom. So I think it's going to be the same thing. I think it's going to be maybe touch a 50-day just to see if it can do it, and then kill all that noise and come back down and break all these 7 back-to-back higher highs. What supports my theory here is where we at? Volume. The volume tells me that there's a so volume on the bottom on the x-axis is time. So shares traded versus time. Volume on the y-axis, share traded versus price. Now there's a gap in price. There's a big gap here. So this gap can bring us up to our target, to our last target on the upside. However, that 50-day is lurking right here. That 50-day is right here. Right, that's my stop. So if I would take a short position at the break of the low of day, I would set my stop to the 50. I would actually probably bring my stop down to the high of day. I would bring my stop down to the high of day, which brings my risk reward to 4, right? Much better to the upside, to the downside. And boom, clap through all these levels. Break this level here, low of day. We have a nice gap in volume till we get to the third target or fourth target, and then from there a little bit of maybe I'll have one runner to get to the bottom. But that's my analysis on Home Depot. Let me know which direction you think is going to go, Home Depot and Boeing. Let me know what your bias is and why. I'm just telling you what I see. I could be totally wrong, right? Some of the plays that I put out in Watchlist last week, I think I put out 5 of them. 2 of them went exactly where they were supposed to go. The other ones went exactly the opposite direction. None of them went sideways. So let me know which way you think is gonna go. Let's see, we have HD. Let's go back to the list. I have like 1 minute before my wife kicks me out of the room. Delta. All right, so Baidu is a downside play. Baidu, rising wedge, not too much targets to the upside, better targets to the downside. We got the 200-day, so I want to see it come back, test 200-day from where it's currently at 152 down to the 200-day, 147, $5 move. Maybe we don't even play it this week. Maybe we wait till it clears some of this traffic, but I like Baidu. We'll keep watching it. Delta looks like it's forming an inverse head and shoulders. Inverse head and shoulders. It's not easy to see here, but I have a shoulder here, I have a head here, and I have a potential for a shoulder here. I see a bunch of buyers stepping in over here on this level. I also have a downtrend that we are currently facing, not breaking, facing, right? I'm trying to touch as many of these wicks as possible. I got 1, 2, 3, 4, 5, 6, 7 wicks that I'm touching on this. So in addition, the size may reduce as and price goes up. Yes. So you talking about Amazon? DYT? Oh wait, hold on. For those that know, shrinkflation is a practice of reducing this. Okay, lesson here. For those that don't know, shrinkflation, which is profitable for traders, it's a practice of reducing the size or quantity of a product while keeping the same price. So that's like when you, Poland Spring bottles. Those little bottle caps got smaller, and I think the bottles also got smaller. So it cost them less to make it, reducing their prices but keeping the prices that they sell it at the same, which means their profit margin increases slightly. It can mean fewer chips in a bag, fewer scoops in an ice cream in a container. Basically, the purchase price remains the same, but the cost per unit rises. So it costs them less to do it. Oh, benefits of retailer, the company, yeah. It costs them less to do it, less to produce the same product that they're charging you, whatever they were charging you before. They made it smaller before they pulled out 5 chips or whatever the case is. So shrinkflation, I never heard that term. That's an interesting term. Interesting term. I think that, and that's something, and that's going to benefit Walmart, Target, Costco, who else? Maybe Baba, right? So keep that in mind. Right now for Delta, I see inverse head and shoulders, bunch of support down here. If I go to the weekly and I zoom out, we're at a level on the weekly where the last time we were at this level, price moved up from it. It came here, tested it once, tested it again, then moved up from it. I'm not saying that it's gonna happen again, but I just do want to always look at the past to see where we were at before. We have this downtrend line. Anybody who has been traveling air travel recently knows how terrible it's been. I think, you know, it's funny. S told me about it like back in like February. He's like, "Yo, air travel is gonna be really bad. I think people are just having a shitty experience," and he was right. You know, Delta is one of the best airlines. They're very expensive, and they've been having a terrible time, right? So, and I think it's just because all these companies are trying to squeeze their pilots. People are still trying to travel. People are still traveling, right? Everyone has travel. Everyone, you know, mostly is traveling at this time. During the summer, they want to get out with their kids. My kid's traveling with my wife soon. I'm traveling in August. I'm traveling again in September. Air travel, I'm scared as hell because of all this bad news that we've been getting. But I like how tight price is getting right here. You can almost do something like this with price, where it has a head and shoulders, but really it's been maintaining this kind of 28 level, 29 level. I want to see a breakup above this level. I wouldn't play this because it's too choppy for me, personally. Let's do downside since we're on downside. Break of yesterday's high or Thursday's high, come down to Wednesday's high, and retest Tuesday's lows. All these are lows. Right. So I like it better to the downside, come back to retest. I don't think that this is a clean setup in any direction just yet. I would like to see it. I would like to see it probably consolidate a little bit better and form some more volume. But if it can get upside for whatever reason, for any, you know, maybe there's a catalyst. We have earnings in 2 days, right? So earnings can typically be a decent catalyst. I probably won't play through earnings because that's not my style. But you got some upside targets, and then if we can get into this gappy area, then that'll be very nice for Delta. The news is gonna stay bad for this. Gas prices have come down a little bit, so that's nice. And that's good for airfare, and for the cost of for operating these jets, and I don't know, maybe the execs release some pressure and they pay these pilots a little bit more, but I don't know. There's a lot going on in this industry. The whole travel and what's it called? Travel and the casinos and cruise lines, that whole industry is getting hammered right now, right? So I'm just reluctant to play it. I like the setup to the downside better than to the upside. It's a little bit cleaner in my opinion, but I'm not in love with it overall. But that's what I see with Delta. Next one is Netflix. Netflix has an inverse head and shoulders. Oh, sorry, it has a double bottom with tightening price action with a wedge. Actually, there's a wedge here. I didn't draw my wedge. I see it now though. We got a nice little wedge there. Prices above the 50-day. It's cheaper for me to fly to Greece than to New York. Yo, I'm going to DR for a wedding, and the tickets are $1,000 a pop. DR typically is like $450 round trip. Tickets are $1,000 a pop. Tickets from pretty much anywhere in the United States to Portugal are like $300. Tickets to London are like $400, right? Actually, I think London is still pricey, but tickets to Europe are cheaper than tickets to fucking Florida and Mexico and the Dominican Republic and Puerto Rico, and that's wild. That's really, really wild. So Netflix has a double bottom. It's in a wedge. It actually kind of has an inverse head and shoulders, kind of. If you want to count this as like a higher shoulder, it's above the 50-day, and we have earnings. And I read something about, and I'll share it. Let me see if it's in my favorites. Yes, I'm almost done. I'll be done in 2 minutes, baby. She's kicking me out. Let's see. I'll share it in the group once I'm done. But I like this rising wedge. I like this wedge rather. I gotta get out of this room. Let's see. Break above yesterday's high, and by yesterday I mean Thursday. And then we can test these levels. Especially now that we're above the 50-day. This is a nice consolidation. Give us some nice measure move into this gap. We went sideways for such a long time. We'll break out nicely into this gap. That's what I'm saying here, right? Downside, break of yesterday's low, or rather, really break of Friday's low. I gotta get out of this room, guys. The rest of these I'm gonna have to do. I got like 3 more. I'm gonna have to just do them, and I'm gonna write a report on all of these, but I'm gonna have to write those and not talk my way through them. Just be very, very descriptive with my description. Very descriptive with my analysis. I know I can feel the heat on my back of my neck. All right, so that's my upside and downside for Netflix. If you guys have any other ones that you want to look at, then go ahead and post it. And I gotta go take a walk. We spent a lot of time in nature yesterday. I hope you guys did the same. It was a very beautiful day. Go take your shoes off and go put your feet in the grass. Get your mind off the market. Get your mind off of money for a little bit. You know, think about all the blessings that you have in this life that follow you around, and every day we wake up to get on these calls and to make money. And you know, there's some people who can't even invest $1 in the market, and here we are, you know, with the skill, right, that can change our lives. So thank you guys for being here with me. Thank you for joining me on a Sunday morning. These things are gonna be on Sunday mornings now, so anybody that's out on Saturday nights getting litty, you're not gonna love it, but you got all Sunday to watch the replay. So I'm gonna go ahead and post this online and show the video, and I'll have my analysis at some point. And maybe I'll work on it now. I love you guys. Thank you guys, and I'll talk to you later.